If you want to outperform the averages and get disproportionate returns when investing in regional markets like Queensland, you have to do the unconventional. You have to do what majority of property investors are not doing. And that is what I call micro level due diligence. Yes, majority of property investors aren't doing that. They're not doing research beyond what I call the suburb level. Now, today in this video, I'm going to teach you exactly how you can take that extra step and dive deeper into the suburb and analyze its pockets, because investing in the right pockets of the suburb can be the difference between a good investment property and a great investment property. It can be the difference between stronger rental returns and stronger capital growth. So I'm going to teach you everything that you need to know today in regards to how to do that, so you can add a few strings to your bow when trying to buy your next investment property here in regional Queensland. Cheers, guys. All right, just quickly, for those who don't know who I am, my name is Troy Simbassini. I'm the owner and head of research for Life Buyers Agency. Now, Life Buyers Agency, we are a specialist buyers agents that operate on the ground in regional Queensland under two brands. So we operate under Capricorn Life Buyers Agency in central Queensland with a specific focus on the markets of Bundaberg, Gladstone, Rockhampton, and Mackay. And then under our other brand called Tropical Life Buyers Agency, servicing Cairns, Townsville, and the surrounding North Queensland and far North Queensland's property market. So we know what's going on in all of these areas, guys, and we know what works when it comes to research and what makes a investment grade property versus a not investment grade property. And we're very peculiar in terms of how we operate because we're on the ground, and we get very specific around suburb, pocket of the suburb, street, and property. So this is why I'm sharing this with you today, is because we know the importance of what it's like when buying in these markets. Some of these suburbs are only the best part of 2,000 properties or dwellings across the whole suburb. So you can drive 2 minutes in one direction of a suburb and you wouldn't think it's the same suburb, because you'll end up in a what probably would be a lower socioeconomic part of the suburb, different types of public amenity and parks, different types of demographic, like you name it. We've seen it on the ground in regional Queensland. So, yeah, if you are someone that wants help, you are struggling to buy, you don't know where to buy, what to buy, when to buy, look, I'm more than happy to have a chat with yourself to see if we might be able to add value to your buying journey. You can visit us on those websites there, and or give us a call on that number, schedule on a call, and we'll find out what's going on with your situation and see if we're able to help you get into the marketplace up here potentially as well. So we get a lot of access to pre and off market opportunities as well. And with that comes the ability to buy under market value and get you into the marketplace a lot quicker as well. Okay, so you've found the suburb you are looking to invest in, and you've identified a property that's ticking a lot of the boxes. Now you need to figure out, okay, am I in the right part of the suburb? Now, the reason why that's important is because, as I said before, that's where the disproportionate returns comes from, is when you can nail the pockets and streets of a suburb. Because trust me, we've seen it firsthand in regional Queensland from Bundaberg through to Kansas. You can drive 2 minutes in one direction of a suburb and be in utopia. You wouldn't believe you're in the same suburb, because you could go from a really nice area where some homes are upwards of six, seven, 800 to $1 million, upper middle class demographic, and drive 2 minutes in the same suburb in another direction and hit a part of the suburb where it's full of social housing, crackheads, lower socioeconomic demographic, really undesirable properties like these. These are the this is the reason why you need to nail pockets and streets when investing in regional markets. And most of these suburbs are only around 2,500 dwellings as well. So they're not actually that big when compared to capital cities, where most suburbs have north of 10,000 dwellings. So the margin for error here in regional markets is very high. So you just need to make sure you don't get this wrong. So the way in which you can figure out, okay, now that I've found this house, is it in the best part of the suburb, or is it in a good part of the suburb, is by, number one, firstly looking at the quality of stock that it's surrounded by. So again, you want to look at the neighboring properties or the properties on that street, and then the immediate 1, 2, 3 streets surrounding the street that your property sits on. And you want to look at, okay, are these houses nice, right? Are those houses nice? And what type of demographic is living in those houses? So the way in which you can determine if those houses are of good quality is what type of construction they are. Brick, are they newer? Are they old? Are they new? Are they character homes? Are they spec homes? Are they boutique bills? You can. There's a bunch of different ways you can skin the cat there and determine and assess, the different types of stock that sits in that immediate area. And it's very easy for us in regional Queensland. We just hop in the car and literally drive around and go, okay, that's a nice house. Yep, this is a nice street, and then the neighbouring streets are really nice because all the houses are all neat and tidy. They're all quality bills, and it's very leafy green, like it looks nice, right? And the quality of properties that are here are good, and they could generate really strong rental returns, and they could attract a lot of interest from home buyers and investors because of the nature of their construction. They are quality properties. Now, that's how you could go about figuring out if you're in the best part of the suburb. So, yeah, jump in and have a look at the different types of properties that is on the immediate street, and then the next 1, 2, 3, 4 streets surrounding your property, because that makes up that immediate pocket of that suburb. And I know it's going to be very difficult if you don't have the ability to jump in a car and drive around, given that you're trying to buy from, let's say, your desktop computer. Another way in which you could figure out the type of stock that's in that area is just jump on a free tool like Domain Street Profile, and identify the street that your property sits on. And what it'll actually do is it'll actually give you a breakdown of the amount of dwellings that sit on that street. And then it would have historical sales of those dwellings on that street as well. So you can actually look at, okay, on this street and on the neighboring street, there's some really nice properties. When I click on that old listing and I scroll through that old listing, and I'll be able to see, okay, there's some really nice homes here. Or another good way is you can jump on Google Maps Street View and have a bit of a look as well to get a sort of an idea on the type of properties that are there in that street, or that the neighboring streets or the immediate pocket as well. So if you can identify a pocket of the suburb where the stock quality is good, right, and it's the type of stock that's going to attract a rental premium and a sales premium, then that's when you know you're onto a winner there in terms of identifying the right pocket of the suburb. Okay, the next metric you should use to determine whether or not you're in the better pocket of the suburb is sales price, right? And the sales prices, right, is going to enable you to figure out, okay, am I in the lower end of the market, the middle end of the market, or the higher end of the market? And obviously, the higher end of the market is where the most expensive sales are happening. And what that means is that because the most expensive sales are happening in that part of the market, that's likely to be the more desirable part of the suburb, the better pocket, because you have higher than average transactions occurring in that area. And if you own an investment closer to where that clustering of higher than average sales are aggregated, then that's where you're going to get those disproportionate rental returns, as well as disproportionate capital growth figures as well, because your property will be surrounded by superior homes and will be able to piggyback off of those more superior transactions that are happening around you. And we've seen it across the board in regional Queensland, where, similar to what I said before, you can drive 2 minutes in one direction of the suburb and be in a totally different part of the suburb, and you wouldn't believe it's the same suburb, because again, you start to move to a clustering of where the lower quartile of the market or the cheaper homes sell. And when you compare that to the upper end of the market, it's chalk and cheese. So our preference is to always get as close to where those nicer homes are selling for in the suburbs, so the more expensive homes, as opposed to where the cheaper homes are selling, because that's where the disproportionate returns are, is where you're surrounded by those more expensive sales. And the easiest way for you to figure out if you're in the right pocket of the suburb based on sales prices is just by simply looking at the suburb, looking at the elasticity of the suburb, and go, okay, well, the cheaper homes tend to sell for around 500,000, but the more expensive homes tend to sell for about $1 million. So what you actually want to do is jump on realestate.com and domain and actually look at this. Use the app, use the realestate.com app and filter the suburb and filter the properties that have sold in that suburb and click on its map function. And what it's actually going to do is actually give you a bunch of red dots of where different properties have sold for in that suburb. And then what you actually want to do is filter the sold properties by certain price segments. So you might want to look at properties that have sold between 700 to $1 million, and you press that filter tool, and it's actually going to give you a bunch of red dots, right, where all of those homes are selling for north of $700,000. And that's where you go, okay, based on where all these clustering of red dots are, this is the better pocket of the suburb, right? Because that's where the higher sales prices are, and that's the part of the suburb that seems to be fetching a premium. And obviously, if you can get your property in and amongst where those red dots are, then you're gonna get those disproportionate returns. So jump on realestate.com.au, use the app, filter the suburb, jump on the sold tab and find those red dots and get as close to the upper quartile of the market, upper quartile of the suburb or the middle quartile of the suburb as possible, because that's where the better parts of the suburbs are based on sales data. Okay, so the next thing you want to look at is zoning. So for those who are unfamiliar with the term zoning, basically all that means is what type of dwellings can be constructed in that immediate area. So you have different types of zones, right? In local government area, you have what's called low density residential, which is an area just full of houses, freestanding homes. You have what's called medium density residential, which is generally made up of not freestanding homes, but multi-unit dwellings like townhouses, apartments, and high-rise buildings. Then you have things like commercial zones, tourism zones, things like that, retail that accommodate for your businesses, right? And your goods and services. So when you are buying in a certain suburb, you want to make sure you investigate the type of zone you're buying in, because that can be the difference between being in a good pocket versus a not so good pocket. And what we find in regional markets is that the for the buy and hold, for the general buy and hold strategy, set and forget type investment property, where you're not looking at doing developing, like building a set of townhouses, redeveloping the dwelling to put high rise buildings on it and things like that. Low density residential tends to be the best in terms of long term capital growth, right? That's where the disproportionate returns sits, is in low density residential. So what you want to ensure is that when you're buying in a suburb, you want to try and get amongst where all of the low density residential is, unless your strategy is to do other things, right? But for the most part, the low density residential areas are the areas that have a tendency to outperform. So the easiest way you can do that is just jump on your local government or the area that you're looking to buy, jump on the local council's interactive mapping tool, and then you'll be able to put a layer over that immediate area of a layer called a zone layer. And that's going to give you a way to assess whether or not you're in the right zone. So it's going to give you a breakdown of the different zoning in the suburb, and then you'll be able to see firsthand whether or not you're close to low density residential, whether or not your property is zoned industrial, whether it's apartments, townhouses, high density residential zoning, because that could definitely affect your property down the track, particularly if you buy a property that's commercially zoned and then 1 or 2 years down the track there's a big warehouse that gets built next to your investment. So that could really deter a lot of potential buyers away from potentially buying that property in future when you go to sell it. At the same time, you might lose a lot of tenants as well, because no one wants to be close to like an industrial building or a business of some sort with a lot of foot traffic and cars as well, in that immediate area. So if you can investigate the zoning of that property and that immediate pocket. That's going to be really helpful in figuring out, okay, how your investment is likely to perform long term, and by getting the zone right, you're going to get disproportionate returns and definitely end up in the better pockets of the suburb. This next one is pretty straightforward, and I know those that are more capital city based, this is extremely important. But in the regional centres, it is important, but I wouldn't say it would have the same weighting as what it would if you are trying to buy in a capital city. And the reason why I say this is because most schools, public and private, here don't necessarily have enrollments that are based on catchments. So it isn't necessarily a market where you'd have to try and buy or live in a certain suburb to get access to that school. No, that's not the case in the regional areas. Only in some parts of regional Queensland this is the case, but for the most part, you can live outside of that immediate suburb that school is located and still send your child there. I think what's more important is proximity to the school as opposed to being in the school catchment when you're in the regional markets. And proximity to the good schools is where you have the ability to get to the school quickly. So you're within, I would say, if you're within a 4 kilometer radius to a really good school, I think is the sweet spot. And that's when you know you're in a really good part of a suburb, is when you're close to one of its flagship schools, right? And the 4 kilometer radius allows you to get to the school pretty quickly if you're in a car, but at the same time, it's within walking distance for older kids and it's within riding distance for kids that attend that school as well. So we find when you're in that 4 kilometer radius of a really good school, you tend to get disproportionate returns. You tend to get better rental returns and better capital growth as well, because often these really good flagship schools, people want to be as close to them as possible. But in saying that, you don't necessarily have to be in that school catchment to be able to send your kid there. So that's the one thing that's different to regional Queensland. But being within close proximity to a good school, I think, definitely allows you to get those disproportionate returns. And an example would be if you look at, let's say, school like the Rockhampton Grammar Schools, right, on the southern side of the Fitzroy River. So you have the range, and then you have Allenstown, and then you have West Rockhampton, and then Wandle, sort of all within close distance to those grammar schools. But what you'll actually find is the range, which is where the grammar schools are actually located, tends to be the really nice upmarket part of South Rockhampton. And what you'll actually find is a lot of the people that are living in the range are sending their kids to those grammar schools there. So those schools are very important in playing a role in how your property is likely to perform long term, and being within that 4 kilometer radius definitely puts you in the better pocket of that suburb and definitely gets you those disproportionate returns, because all those houses that are like within walking distance to the grammar schools, like it's an absolute premium. You have to pay an absolute premium to rent those properties. But at the same time, to buy a property close to those grammar schools, yeah, you're looking at almost north of $1 million now, in some of those really nice parts of uh, the range. So, yep, school catchment, if you can get that right, or proximity to school within that 4 kilometer sweet spot, radius sweet spot, you're going to do pretty well. All right, and now the lucky last thing that you could use to assess whether or not you're in a nice pocket of the suburb is by looking at the lifestyle amenity of that pocket. So, what does that pocket have on offer to make my lifestyle better? So, things to look at from that respect, like what we like to do when we're analyzing the lifestyle amenity, is we like to look at the streets first. Like, are the streets like narrow and leafy green? Because that that obviously boosts the ego, right? That leafy green street, narrow roads gives you a sense of pride that you want to live, that you live in that area, right? And you actually find that people in those nice leafy green parts of town tend to be more happier. Um, the next thing you want to look at is the parkland. So if you have some parks that are close by to where your property is, and those parks are well maintained and they're neat and tidy and they're clean and they attract a lot of families and people with pets to go and spend time there and use that amenity. That's a really big plus, right? And that's when you know uh, that your property has some really good appeal because it's within close proximity to that really good amenity there. So parklands is a good one. Walking tracks, I think, is really important as well. So the walking tracks, like things like footpath, and then obviously like running tracks as well, like up on hills and. But if you have footpaths, we have the ability to kids to ride bikes. You have the ability for mothers to push newborn bubs that are trying to get fit again. Families that are out and about walking the dog in the afternoon. If you have that public amenity in that pocket of the suburb, that's when you know uh, you're in a really good part of the suburb. Because what you actually find is that there are some parts of the suburbs that you're looking to buy and that wouldn't have any of that, right? They don't have the nice leafy green streets. They don't have any parklands. They don't have any really good footpaths and walking tracks. And obviously, that's a can be a potential deterrence from people that want to rent in that area. A lot of people actually want to rent in certain areas because it has all of those amenities. So if you can investigate that lifestyle, that type of lifestyle amenity, health, fitness, and wellness, I think you're going to do really well. And your property is going to definitely outperform and going to get higher rent, and you're going to attract a higher sales premium if you decide to sell your property, and you're going to get that better capital growth rate because properties that are clustered around the better amenity tend to outperform for the most part. And this is what we've seen definitely play out in regional Queensland. The last two, connectivity. So this sort of plays into the ability for lifestyle improvements. So if the property that you're targeting and then you're looking at that part of the suburb, if it connects to a connecting road that takes you directly to a park or directly into the CBD where you can wine and dine and cafes and things like that, then that's a huge plus, right? You can get to some parts of the suburb, right? And they can be completely barren. There could be nothing in sight, no parklands, no walking tracks, no nice little quiet streets. It's just barren, right? So if you can avoid those areas and try and find stuff that's as well more connected, then that's where the better properties lie. And then obviously the last thing there is if you're in the pocket of the suburb where it has a view because of nature, it backs onto a nature reserve, or it's within walking distance to a beach, or walking distance to mountain and or rivers and things like that. Obviously, all of those things will play a role in improving one's lifestyle, and that amenity will in turn allow your property to rent for a premium and obviously get those disproportionate rental returns. So if you can drill down and find those pockets of the suburbs that are ticking a lot of those boxes, then that's when you know you've certainly identified the better pocket. Okay, guys, well, I hope that's been helpful. I hope this is a process that you can apply to your next investment. As I said at the very start, if you want those disproportionate returns when investing in regional markets like Queensland, you need to drill beyond the layer of the suburb. You need to go deeper. You need to go into the pocket, the streets, and then the dwelling. You can't just buy something because someone told you that that particular suburb was hot right now, or you heard on from a family friend that they bought in this suburb. Like you need to take your research deeper into the various layers of that suburb because that's where the better returns exist, and that's where you could potentially, as a property investor, outperform the markets. And this is what we do on a day-to-day basis for our clients: is we take that extra step and apply this framework to ensure that we're buying not just in a nice suburb, but in the better pockets of that suburb, in the better quality streets, and then buying the better quality dwellings. And trust me, guys, if you can do this and apply this framework to your next purchase in regional Queensland, you're going to do extremely well. Otherwise, if you are needing help, then feel free to reach out to me and the team as well. You'll see our details there. Give us a call on that number. Visit us on those websites. You can book in a call with myself or one of my team members, and we can see if we are able to give you a hand. Cheers, guys. I hope that's been helpful for you, and I'll see you on the next video.